Healthcare, the worst sector today, one of two to finish negative. Our next guest, though, says it's one of his favorite places to invest through the downturn with a high potential for deals. Joining us now, JMP Securities CEO Mark Lehmann. Welcome back. It's good to see you here at Post 9. Deals. Wow. I mean, we haven't had any deals. There's no IPOs and near anything.
That's true. But last week, there were 15 deals on Wall Street of consequence, and 10 were life sciences deals. So it has been a drought. Before that, 3 weeks of no deals. Last week, 10 deals. That's a better backdrop for life sciences.
We opening the spigot even more, or what makes you think that we are?
Well,
let's put it that way.
As you know, the market for life sciences actually got ahead of the NASDAQ, so it's been soft for a while. And these companies are 6 months further away from the market. That means they're 6 months closer to needing more cash. So there's a little bit of a denial phase that we've been through. There's now an acceptance phase. And I think between investors and issuers, it's time to put some prints up because they need the capital to get data.
Are we specifically talking about the XBI? I know you've highlighted that. Is that the place to be within healthcare right now?
It's a place to look, right? That's going to be weighted towards much higher market cap companies. The smaller companies are the ones that have near-term data and probably have more thirst for capital. But I often say there's no way to be a pessimist and be a life sciences investor. You have to be optimistic some of these things will happen. And I think you're seeing the deals happen where they're the market clearing price.
So you're saying the XBI is better than the IBB?
I think both are fine. What you want to find is the best companies within them.
Okay.
Life sciences is undervalued right now, given the data flow that we're going to see over the next 12 to 18 months.
Okay, I'm glad you said that. I just want our viewers to understand the difference between the two and why one may be more attractive than the other at this particular time. Talk some names here. KRTX. Why do you like that one?
It's Karuna Therapeutics. You'll see how much that stock's up this year. They had some unbelievable data in schizophrenia. They are going to hit other indications. It's a reminder of how much these stocks can move when the news is good. And the news was spectacular a few months back. The stock's going to hit other indications. That'll be good for the stock.
Okay. CYTK. Why do you like that one?
Cytokinetics plays in the heart failure market. The stock has done exceptionally well over the last few years. Their best competitor got taken out by Bristol Myers for double the valuation Cytokinetics trades at. So there's an umbrella of market cap there that I love.
Confluent, CFLT.
Another tech stock that has not done particularly well this year, another unicorn, playing in a huge TAM. And I think I'm very optimistic over time that they will garner some of that market cap right now. The stock trades right with the NASDAQ. But in terms of the large cap tech names that we love at JMP, like Snowflake, Confluence right there, large TAM, great management, is going to execute over time.
So you make me think when you use that, you use the word unicorn, as did Scott Minerd earlier today. This dislocation he suggested of these highly levered unicorns that have come down too much, that are once in a generation opportunities. You subscribe to that?
I think no two unicorns are alike, if that's a phrase. You have to pick your spots. A few years ago, we loved a company called Workday that wasn't doing particularly well, that had a large TAM. I think the names that we mentioned here will be also ones that have a large TAM. You have to be optimistic to play these stocks. You have to be forward-looking. You have to. I'm part of a much larger company now. We sold our company to Citizens about a year ago. We were optimistic that they'd be a good partner. They're here in New York this week, launching something very specific, the living portrait of New York City. If you're not optimistic, you don't love what's happening, you're not going to play in this market. We are optimistic about this.
Well, I mean, you got to be realistic, too, don't you?
You do, but look, the stock market has had a pretty big fall in the first 6 months of this year. It's the worst first 6 months the NASDAQ has ever had. I don't think capital formation and innovation has slowed down at all. In fact, I look at these life sciences companies, they're down half, that 50% the XBI is. I don't think the life sciences CEOs have gotten 50% stupider the last 18 months. I think we're going to have huge innovation, and you want to play the bigger names because you're going to have huge end markets.
All right, we'll see you soon. Mark, thank you. That's Mark Lehmann joining us.